Welcome to today's Morning Report chart analysis videos on Friday the 4th of May with me, Rich Perry, market analyst at Hantec Markets. Non-farm payrolls Friday. And generally on non-farm payrolls Friday you do tend to see a little bit of consolidation, but you are also seeing a little bit of dollar strength that is pulling through, which is interesting because the dollar has been strong in recent weeks. Little bit of a correction yesterday, but it's sort of regained a little bit of the upside impetus today. And it's back above 92.50 area, which is sort of a bit of a near-term pivot on, medium-term pivot on the dollar index. Now, the question is, what does non-farm payrolls do for the markets? Well, let's have a look at the expectations. Just before we do that, Eurozone PMIs came in a little bit worse than expected on the services and composite. So doesn't exceptionally help the euro, considering it's come under pressure recently. Now, non-farm payrolls at 130, 192 headline, not the sort of factor that's going to be the big driver. The big driver is going to be this number here. Average hourly earnings. If it picks up to 2.8%, that would be sort of pretty much the final piece of data really that starts to support the sort of growing inflation argument in the States, and there will be a dollar reaction if that is the case. But 2.7 is the expected, and that's in line with last month. So watch out for that. If it's 2.8, 2.9, we could see some dollar strength. But in front of that payrolls report, we have. Where am I doing? We have a market that's basically slightly dollar positive, dragging euro dollar lower, dragging cable lower. Interestingly, the yen is actually outperforming today, but it's the only forex major that isn't weakening against the dollar today. We've also got an interesting sort of rebound in equity markets, where the DAX and the FTSE are higher. S&P 500, look at this rebound that we saw yesterday into the close. Really significant losses early doors, and then rebounded strongly into the close, sort of to unwind those losses. Now you've still got this trend of lower highs and lower lows on the S&P 500, but yesterday's rebound could start to sort of suggest that maybe the market is due a turnaround. I think it's very early stages if it were to be the case, but that rebound was quite significant, and European markets have been sort of boosted by that. Only marginally, and to be honest, I expect that they're sort of going to sort of consolidate now a little bit with payrolls this afternoon. So I'm not expecting too much movement there. But yeah, payrolls is going to be key this afternoon, and that's fairly much where we're sitting now. So my charts say Euro Aussie has been sort of correctively trending lower in the last sort of week or so within this uptrend channel of the past 4 months, but it's now really putting pressure on that channel. You're seeing lower highs, lower lows. The market has sort of turned a little bit at 158.60 as today's low, rebounded, and it's actually around about sort of not a million miles off flat on the day now. But look at this 55-hour moving average. Caught a couple of lows back in April, but generally speaking it's a really good basis of support. So if you start to see the market trading below that and closing below that 55-day moving average, I think that would be a bit of a signal for a turnaround. The reaction low at 58.43 protects 158 figure as a pivot, and you got that reaction low at 57.70, but 58 figure really is sort of all pretty much that pivot. But look at this RSI 45. It's now at what's that, 3-month lows. You've got the MACD lines, which have crossed lower, the stochastics, which are falling. All of this has downside potential as well. So this is still, I think, playing out, within the scope of this long-term uptrend, which is sort of dates back to March, so 14 months. March 2017, so 14 months of uptrend that I still think we're corrective within. So I think it's coming. I think the there's the pressure of the momentum indicators and the sort of corrective move that we've seen in the last week or so just suggests, really, I think this uptrend channel is breaking. It's not been broken yet, and as I said, that 55-day moving average is supportive, but a closing break of that trend channel and also the 55-day moving average, I think, means 158 figure, and then possibly even back towards the bottom of this long-term uptrend. So the corrective forces in this chart are growing. You can see that on the hourly chart, whereby you've got this downtrend intact, as I said, over the last few days, but 159.65 is a key pivot now. Having been resistance, it became supportive, and it's now been broken and become resistance. So that is a key area of resistance overhead. If you do see a bit of an unwind within this downtrend, I think it would be a chance to sell. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.